some of the considerations you need to make when you are exporting data from your MetaTrader platform into Strategy Quant X. We've had a fair few discussions in our forum just recently, particularly with Cyber, one of our new members. Hi Cyber, where it's important to understand what we refer to as your broker server time versus your local time, because those concepts are important in relation to ensuring that the data that you're using is linked to the correct broker time, because the particular points of that data, such as the open, the high, the low, the close, all refer to the broker's server time as opposed to our local time. So when we bring data over from MetaTrader, which in this particular instance we are using data sourced from Pepperstone, which is a regulated broker in Australia. Pepperstone acts on its own local server time, which is different to other brokers' server times. So what this means is that when the broker actually constructs their data, and we construct bar charts from using the data provided by the broker, it's important to know that that data will be constructed in accordance with the broker server time. So therefore the open of, say, Pepperstone, which operates at a different server time to, say, Dukascopy, the open on that day or on the following day will be located at different locations, dependent on the broker's server time. So we'll get into it. The first thing we want to do is we want to identify how we know what time is the broker's server time. And the way we do that is when we open MetaTrader, our platforms that are linked to our broker's service, if we refer to our market watch symbol listing, you'll notice that the time of the market watch is specified at the top of the listing. Now this is the broker server time, not our local time. So as you can see where I'm pointing now with my cursor, I am now doing this presentation at 2:35 p.m. in local time, but my broker's server time at this point in time is 7:36 a.m. So Pepperstone are working from a completely different time geography than what our local time is expressing. So the question then is, well, how do I convert this broker server time into some of the definitions that Strategy Quant use in determining its data feed? And Strategy Quant uses a variety of sources such as Universal Time Coordinates, or UTC. It might use GMT, Greenwich Meridian Time, or it might use Eastern Standard Time, which is New York time. All of these things we need to know in relation to our broker's server time, because when we are undertaking our tests within the SQX environment, we want to ensure that the data that we are testing is synchronized with the correct server time that we will be using within our MetaTrader platform when we are trading these strategies live. So a quick way to determine how the broker server time, which is at currently 7:37 a.m. in the morning, relates to the universal time coordinate. What you do is just quickly do a Google, and in that Google just say time now in UTC. Hit that and you'll see that the universal time coordinate, or UTC plus 0, is 4:37 a.m. So then if we compare the 4:37 a.m. to the server time of 7:37 a.m., you'll notice that Pepperstone therefore currently is at UTC plus 3 hours. So from 4:37 a.m. Current universal time to 7:38 is UTC plus 3 hours. Now remember, there is a problem with Pepperstone in that a lot of its instruments actually utilize daylight savings time, which means that dependent on whether daylight savings is in effect, can mean that this might shift 1 hour to the plus side of the UTC time coordinate. So in this instance, what I do is I look at Pepperstone, and all of your brokers will have this information. But now if I look at the server time, it says that server time is set to GMT +3 while daylight savings is in place, and GMT +2 when the US is not under daylight savings. So what this means is that in my reference, I tend to ensure that my Pepperstone data is UTC +2 but incorporates daylight savings time. So therefore it can be UTC +2, but when daylight savings comes into effect, it becomes UTC +3. So that's important when we are bringing that information into Strategy Quant. So before we go into exporting data into SQX, I just wanted to have a quick discussion on the sensitivity of our tests, particularly our daily time frame long-term trend following tests, in relation to things such as slippage and also in relation to time variation of broker settings. So what I thought I'd do is I would use a sub-portfolio I've created within SQX for Euro USD, which engages multiple forms of trend following model. So when we go into it, we can see we've got Donchian breakouts using ADX. We've got variations of trend following strategy here. We've got about 1, 2, 3, 4, 5, 6, 7, 8, 9. We've got 10 different trend following models, which we are applying to Euro USD in this example, Euro USD. You'll see that I allow for a maximum of 10 trades per day because we're using 10 different trend following systems in this sub-portfolio. You'll also notice that it is linked to Euro USD, so this will trade on Euro USD. So let's now run this test using Euro USD on the Pepperstone data between the dates of 2005 up to current day. In this instance, we're going to be using Pepperstone data, and down the track I'll show you how we also compare this to Dukascopy data by using tick data story, which we'll get into in a second. But we'll run this test now quickly in visual form. That'll generate a report which we'll then save, and then what we're going to be testing initially is the sensitivity of our test to slippage. So at the moment you can see that we are running our test with current slippage, which if you refer to what is the current spread we're talking about here, what is the current spread on Euro USD? It's 6 points currently. So when we express current spread here, it's currently referring to the current spread and applying that across the entire back test. So in this case, we're applying approximately a 6-point spread to this test. We'll run it quickly. As you can see, all of the models are firing. I won't do it in visual form going forward, but this is just to demonstrate that it is working. But remember, it's applying the current spread, which is 6 points over this back test. Right, that's therefore generated a report. As you can see, the equity curve is a pretty good one over the period of time, which we ran from 2005 up to current day. The report, this is a report generated in MT4. I'm now going to save this report. So I'll save it as Euro USD using the SQX output files for Pepperstone. Now, I'm currently using I'm using a UTC of 2 with daylight savings time. So this is the file I'll save it as, which I do. I've already done this test before, so I won't resave over that. Now what I'll do is, well actually I will resave over that, that's fine. So I'm now going to save it over this file here, which has now generated my report, which I'm going to refer to in Quant Analyzer. Here's the report here. Now what I'm going to do is I'm now going to run this test with a spread of, let's use 30 in this instance, a spread of 30, which is 3 times the current spread. I'll run this test now. That's now run. So I'm going to save this report as Euro USD using Pepperstone. I'm now going to go plus 30 spread, so I can identify that file. It's using those same timings, so I've saved that file now. And now I'm going to really get extreme and apply a 50-point spread over the entire backtest and run that. Which is done now, and I'm going to save that file as 50 spread. Here we go. Right, now that I've generated these files, I'm going to go into my Quant Analyzer, and I'll just clear these out. And I'm going to bring in those tests and see what they look like when compared side by side. So in this case, I used these 3 files for Pepperstone, the one with the current spread, the one with 30 spread, the one with 50 spread. I'm now going to bring them in, and this is over the same common date range from 2005 on. So I brought those 3 files in. You can see from their performance metrics, they've all got a similar number of trades, 463, 463, this one 462 using the 50 spread, only a 1 trade difference. Profit levels, fairly similar, but now let's visually look at these and compare the differences. So we're looking here. So as you can see, variation in spread on this test shows very little difference. There's very little discrimination between these 3 different tests when you compare the entire equity curves of each 3 tests that have been undertaken. So this gives us confidence that variations in spread across the backtest history is not going to materially impact our models when we're dealing on the daily time frame with such long-term trends that are holding for often multiple years, and so they're less sensitive to these initial conditions such as spread. They'll also be less sensitive to time variations in the data. They'll also be less sensitive to things such as variations of swap, variations of slippage, because we are trading such long-term trends, and the major dominant price movers are these outliers as opposed to the random perturbations that occur throughout the series. It's these major things here which are driving the price over the long term. So the small minor differences in spread, slippage, swap, they do not contribute to the significant performance measures, performance aspects of our long-term performance. The small perturbations associated with varying spread, swap, slippage, they're insignificant in the scheme of things. So that hopefully convinces you now of dealing with variations of spread. Now let's look at variations in time frame as we've been discussing so far. So what I've got here is I use tick data story. So when we have a look here, I use tick data manager, which collects information from brokers from a variety of different sources. In this case, we'll be comparing Dukascopy data against Pepperstone data. So what this means is that currently, by not ticking this box here, I'm using Pepperstone data. However, when I tick this box here, I am using Dukascopy data. So In this case, for Dukascopy data, we don't have long-range data back to 1980 or whatever. We've only got data from about 2004. That's why I'm running this test from 2005 to 2022, so we can compare and contrast Dukascopy data against Pepperstone data over the same time interval or the same date range. So we've already got our test for the current Pepperstone on the current setting and for all of these different spread settings. Now let's tick on Dukascopy. And when I go into Dukascopy, you can see here that I'll be using the GMT offset, which is the UTC offset of +2 with daylight savings time. So this is the same approach I use for Pepperstone. Now, Dukascopy, being located as a broker over in Europe, uses a different UTC local time. However, we ensure in this process that we set it to our current broker time, which is UTC +2, as I've already demonstrated before. So that's why I apply these settings here. So now what happens when I apply it over from 2005 currently, it will regenerate that tick data for that UTC time coordinate. So it's going to be reconstructing the bar data, which is already done because I've already run this test, for the UTC +2. So now I can run this and it'll be generating the Dukascopy data. So I'll run this. In fact, I'll stop it because what I'll do is I'll just show you visually what's happening. So when I run this, you'll see that all the trades are activating like normal, but this is running on Dukascopy data, not Pepperstone data now. And it'll almost be finished. Almost there. All right, so that therefore generates a report file and I save that report. Now, what I've done here is I've saved all of these possible combinations here. So the ones I've already explained to you is the variation in spread using Pepperstone data. But now when I prefix this Dukas, that means I'm using Dukascopy data. And this means, in this case, this is Euro USD using Dukascopy data with our SQX models with a +2 UTC offset. This is the same thing using Dukascopy but with a +3 UTC offset. And this is the same thing using Dukascopy data using a +8 offset, UTC offset. So as you can see, I'm using different time zones here in the construction of that data and running my tests. So therefore I can compare and contrast that visually in when I look at it in Quant Analyzer, the performance reports. So let's import those particular models, the +2, the +3, the +8 offsets for Dukascopy, and also I'll compare that against my +2 Pepperstone over the same time frame. So actually before I do, I'm just going to clear all of this. So now I'm going to import those files. Over the same time range from 2005 to current day. Okay, so here you see that there is a variation in trade number. So this is saying that the different use of the time zone is actually does affect the actual results to a degree. I still maintain that over the long term it's immaterial, which I'll get to shortly, but you can see there is more variation here in the trade number and in the overall profit than there is in the variation of spread. So let's visually compare and contrast all four methods. I'll just have a look. So here we go. So I'll just move this over here. You can see that the use of the different offsets, in this case, the green is using the Dukascopy plus UTC2. The dark red is using the Dukascopy I think the dark red or the purple, look, this just shows that the variations in time zone do have an effect, but still they are catching outliers in the same region of the date range. But the variation, to me, actually is fairly immaterial because I'm only concerned with the robustness of this strategy, and I don't use my back test as a way to test whether they're valid going forward. I'm using this to test their robustness and whether they generally hold up over the course of time and don't significantly deteriorate. So whilst there is variation here, more variation than in the spread, I still regard this as small. I'll show you what I mean when I get to the long-term data, but as you can see, if you are concerned with the variation in time zone and why it's important to set it to your broker settings, this demonstrates why. So look, what I have done just to compare and contrast all of this is I've also done some very long-term tests using variation of spread, just to show you how, in the scheme of things, these variations we're talking about are little when we're dealing with this robustness over very long-term data sets. So to show you, I'm going to be loading the reports generated from these long-term models. So this long-term model uses Pepperstone data because unfortunately I've only got long-term data for Pepperstone back to 1980. I don't have the same for Ducoscopy. So I'm using the current spread, the 30 spread and the 50 spread over long-term data to compare and contrast the difference between the tests. So as you can see here, we have almost the same number of trades using this variation in spread, which is quite a considerable variation in spread. I'm now going to look at them and see what is the variation visually between the three. And I'll just move this. So as you can see, really, I'm not worried about this variation. As you can see, the current spread and the 30 spread are almost sitting on top of each other. The current spread and the 50 spread, of course, there's a separation here because it is a significant impost 50-point spread over the entire backtest history when the current spread is sitting at around 6 points to 10 points. So that is a worst case scenario, but you can still see that this model stacks up really well. So the reason I've been discussing this is that, as you know, both Fred's models, his in-house workflow process, and also the SQX models operate with their entries off the open of the bar. So therefore, the time zone is quite important to ensure that you are working from the same open in terms of your broker server time zone. In relation to the overall material impact of these variations over the long term, they are quite insignificant, but if you want attention to detail and preciseness, best to get those settings correct. So now that I've gone through all of that, we can now go on to how we get this data into SQX and ensure that we are using the correct time zone for the SQX processing. Okay, so now we're on to the discussion. How do we get this data from Pepperstone, from our MT4 platforms, over to SQX? Well, the way you do it is you use the History Center in your MetaTrader platform, which is generating all of the trades for your Pepperstone tests. And in this case, for instance, for Euro USD, on the daily time frame here, you can see this is all of the open, high, low, close data for the daily time frame from current day back to, in this case, 1971, where the data first started. So I've got a very long range history here in Pepperstone terms. So this is in UTC +2 with daylight savings. And now I want to get this into SQX. So the first thing I do is I highlight the time frame that I want to export, and I simply press the export button. What this does is it generates a file, usually with the correct time frame nomenclature. So in this case, Euro USD, and the 1440 is the number of minutes in the day, so you know you're dealing with daily data here. And I save all of my my Pepperstone data into a folder on my PC, and in this case I will overwrite the data for Euro USD using what's currently represented. It's now going to replace that data, and now I've saved that into that folder. I do that for any of my markets that I'm trading, whether it's Euro USD, whether it's wheat, whether it's soybeans, whether it's whatever. I just use the history center, and then I export that using that functionality I've just shown you into that file. So when you go to my directory, I'll just go into it here, you'll see that there is a directory here called Pepperstone data, and you'll see in here that I've loaded all of my daily data for all of my different markets from Pepperstone into this folder, and they are stored as a CSV file. And when you open up those CSV files, for instance, I'll open up Euro again, Euro USD, the one I've just saved. I saved it today, 14th of April 2022 at 4:19 p.m. I'm now going to open that up, and you'll see that it's in CSV format with the open, high, low, close, and the volume represented for that file. So we have the date of the daily data. So this will be the date and the time reference. So because it's daily data, it's all signified by 0.00. It's taking the daily data at a defined point in time in the 24 period horizon, and the open, high, low, close of that bar, and the volume. So when you get to more recent dates, you see the volume is going up and down, and all of this data is saved in CSV format. Right. So now that therefore gets all of the histories that are in your Pepperstone Brokers data into a directory. You'd do the same for Dukascopy, you'd do the same for AvaTrade, you'd do the same for IG Markets, whatever it is using the MT4 platform, whichever broker is attached to that. This is what you'd do, and so I save it in this location. So now the question is how we get this over into SQX. So I'll just bring over my SQX data now, and we'll refer to the data manager. And if I sort this data manager, you'll see that I've got a number of instruments in here from my Pepperstone source. So that's why I've labeled them Pepper. Spot crude from Pepperstone, spot Brent from Pepperstone, cotton from Pepperstone, nat gas from Pepperstone. This data has all been imported over from MT4, and it's the daily time frame data, D1 data, open, high, low, close. You'll also notice that the time zone represented here is Eastern Standard Time plus 07. That's US time plus 07. So what does that mean in relation to UTC plus 2? So once again, you will want to Google that. So you might say UTC versus Eastern Standard Time, which is US time. You'll see UTC plus EST conversion world clock. You'll see that universal time, UTC plus 0 is 6:23 a.m. Eastern Standard Time is 1:23 a.m. So you'll see that Eastern Standard Time is behind UTC, and the difference is 7 hours. So UTC plus 7 is the same as UTC plus 2, or EST plus 7 is the same as UTC plus 2. You just got to work it out from the information you're getting. So I'm happy that this is expressed in my Pepperstone time frame, even though it's referring it to Eastern Standard Time plus 7, because this also includes daylight savings time. We'll see that when we're bringing the data over. You'll notice that I've not only got my Pepperstone data in here, but I've also got a lot of minute data, which is coming from Dukascopy sources from SQX itself. So SQX allows me to download at high speed Dukascopy data here, once I've set up the symbols and the instrument configurations, I get access to the M1 data feed or minute data from SQX, which attaches to Dukascopy sources. So given that this Dukascopy data that I've downloaded from SQX is in UTC plus 0, I need to change the UTC coordinate here to UTC plus 2 on this minute data to convert it to my Pepperstone like-for-like time coordinate. So you'll notice that all of this data I've downloaded in universal time coordinate plus 0, I need to clone. And when you clone the data, you'll see that it puts a UTC plus 2 here. So this is the minute data that I'll use as a proxy, which is from Dukascopy, as a proxy for my Pepperstone data. But the first thing you've got to do is you've got to clone that data. I haven't cloned for a while, but I think what the easiest way to do it is you look at Tools and you see Clone to Time Zone. So this is clone data. You cannot clone it again. So I'm obviously using clone data here. Sorry. So let's go to Euro USD. This is the original data source in SQX, which is in UTC plus 2. I then go Clone to Time Zone. It's saying Euro USD, the format, what shift do you want for that cloning? So in this case, I put a plus 2 here as my shift, and in here I could choose my time frame. I could call it UTC plus 2 here, but in this instance, because EST plus 7, New York including daylight savings time is the same as UTC plus 2 including daylight savings time, I've just labeled it EST plus 7. And once you've done that and you click proceed, it'll clone that data. Now the good thing about the clone data in this SQX platform is that when you update your data, you only update the UTC data, and the clone symbols in your database will be automatically updated when you do these periodic updates of your data coming from SQX. However, in here you can see that we've got 3 different data sources. We've got the Pepperstone data source on a daily time frame, EST plus 7. We've got the Dukascopy data source in minute time frame using UTC plus 0, and we've cloned that data source from Dukascopy in minute data to UTC plus 2. So I've got 3 forms of data source here. Now, of course, I'll be using my cloned Dukascopy data, UTC plus 2, in comparing and contrasting against my Pepperstone data, which is in EST plus 7. So I'm only using 2 sources, but this shows you how the database is structured. Now, when you first start loading instruments into this database, the database is blank. So the first thing you've got to do is set up your instruments to give the symbol name, the instrument, and its configuration settings. So even though you'll be presented when you start out with SQX, you will have a blank database here. The first thing you've got to do is you've got to construct your instruments. So you come to this Instruments tab here and you go Add Instrument. So you've got to give it an instrument name. So that's why here, if I'm using Pepperstone data, I will label it EURUSD _ Pepper to show that I'm deriving it from Pepperstone sources. If I was using it from Dukascopy, I might go EURUSD _ Dukas. But because I'm using SQX's data, they've already termed it EURUSD, so I just accept their instrument designation. The data type, this is where what you need to do is when you are using data from your Pepperstone data source, to find out what data type it is, go to the specifications of the data. So if I go to Cocoa here and I go specification, you'll see that here it's calling this a CFD here. So I will designate that a CFD. If I was going to EURUSD, or let's say EuroCAD, and I go to specification for EuroCAD, it designates it 4x. So these designations, the reason that Pepstone uses different designations is it uses different calculation methods in the MT4 platform in treating with that different data type. So when I'm in SQX, I want to make sure that the data type correctly expresses how MT4 is representing it. So in this case, for that instrument I chose, let's say I choose here Euro USD, you'll notice it's designated 4x. Right, so now this is where it starts getting important that you correctly configure your instruments. And this is why I've provided a spreadsheet in the forum, which is a way to help do this fairly quickly. It took a long time for me to put together because there is a fair bit of detail wrapped around in this. So I'm not going to go into the nuts and bolts on it, but I will just show you the spreadsheet and how to use it. So instrument configuration. Righto. So just to explain this spreadsheet. You'll notice that the spreadsheet is broken into two sections, the broker information and the SQX data settings. So this is the information that's coming from your MT4 broker platform. This is the information that's being loaded into the configuration settings for SQX. So if, for instance, I come down to an example, Euro USD, you'll notice that the source in my broker information is coming from Pepstone. The quote currency is USD. So if you'll notice, what I mean by the quote currency is the denominator of that pair. So in this case, it's USD for Euro USD. USD is the denominator of that relationship. New Zealand dollar above is the quote currency. The denominator of Euro New Zealand is New Zealand dollars. That's the quote currency. The deposit currency is the currency that you test on in your broker platform. So I always test in US dollars when I'm undertaking my back test. So in expert properties here, when I'm testing it, I'm using US dollars here. So that is the deposit currency that I want to undertake all the conversions in US dollars. So when I look at Euro USD, we've explained quote currency, we've explained deposit currency. So the exchange structure, so what this means is that because the backtest is being undertaken in US dollars and the deposit currency and the quote currency are in US dollars, the relationship between the price here is a one-to-one relationship. USD to USD, a one-to-one relationship. However, when I look at Euro JPY, I am actually undertaking my backtest in US dollars. You'll see that because I'm undertaking the backtest in US dollars, but the quote currency is in Japanese yen, I need to apply an exchange rate here. So this is the exchange rate between the Japanese yen and the US dollar. 103 Japanese yen to 1 US dollar. Where I get those exchange rates, you can get it from the relationship. Well, the best way is you get it from the exchange rate for say USD JPY. You've got the relationship there. It's saying there's USD JPY. I'll get the relationship. Here we go. USD JPY. We know currently it's 125.393 Japanese yen to the US dollar. So because these float around all the time, if I go to USD JPY, here we go. At the moment, this relationship is 103 Japanese yen to the US dollar. Let's go back to Pepstone quickly. It is 125.39. So periodically, 125.39. Periodically, you've got to change this exchange rate depending on how the exchange rates are moving. And this, therefore, will change the exchange rate and change the associated calculations. So when you come over to the Ducoscopy data, it will adjust this point value. So if I, let's just now go back to what it was. So I'll undo and undo. You'll see that the point value is 963 points over here. But if I adjust the currency, you'll see now it changes to 798. That's because of the nature of the exchange rate changing over the course of time. I set up this spreadsheet about a year ago, and I really haven't revisited it since. But this is how the spreadsheet works. So it's obtaining information from the broker sources, which is here, and then it is configuring it in SQX data settings. So we've got data type, point value, point tick size, pip size, etc. So when you come to Dukascopy, you've got the pip tick size to put from the spreadsheet, etc. here. So it took a long time to develop this spreadsheet, and you might have, look, it's almost like a day session in itself to go through all of this detail, so I won't do it here. But it certainly is a shortcut if you're using this spreadsheet, and you might need to do it yourself just to work out how to do it, but use this spreadsheet as a guide. That's enough to what I'll say about that. Clearly, one of the things I just to be aware of is this has been configured using my Pepperstone markets for SQX settings. If you're using a different broker with different instruments, you'll need to set it up yourself in accordance with your instrument specifications for your broker's data. But this will give you a guide in how to do it. So that's the configurations, that's bringing the data in. So once I have configured my instrument in here, the next thing is bringing the data in. And how you do that is you come to your data setting. The first thing, when you want to import data from Pepperstone source, we've gone through the adding symbol. So when you add a symbol, you've got to add the symbol name, all of the configuration settings, etc. Once you've gone through that process, it's then set it up in the listing. You can now go, you've got to select the file you want to import. So in this case, I want to import my Pepperstone data. So I want to find my Euro USD Pepper data. Euro USD, where are we? Euro USD Pepper, this is it. This is my Pepperstone data. It was last updated on the 4th of March 2022. I now want to add that data I've just exported from MetaTrader into and update this. So you go import file, you select the data source. So I'm now going to be referring to my Pepperstone data directory where I've saved all of my exported data. I'm now going to select Euro USD 1440, which is my daily data, which was updated just a moment ago, which you all saw. I'm going to select that. It's now selected that file reference. Do I want it to be in Eastern Standard Time plus 7 New York time with DST, Daylight Savings Time, activated? Yes. I want this to be in UTC plus 2 with Daylight Savings. So I select this. You might, if you're using UTC plus 2, just select it from the listing here with Daylight Savings activated. The imported time frame recognized automatically. It comes from MetaTrader as a data source, this particular data. That's set to 0, comma delimited CSV files, comma delimited. Date format is in year, month, day format. When you select these options, it'll present it here in the manner it's going to be imported. And this is exactly how I want to see it being expressed. Okay, and now I go start import. Can I import job? Data import, already in queue. Okay, so you'll see that the process has actually been completed. And I think I must have clicked on it twice. It has updated the data to 14th of the 4th, which is current day. So I'm happy it's updated all of the data. So if I go into that data and I look at tools, view and analyze, just want to check that it's brought in that last data. You'll see that it has. It's brought in all of the most recent daily data since the latest update, and it's now in Pepperstone. So now I can undertake my tests within SQX using this particular data source in my workflow process. Guys, I could go on forever. I think it's best to leave it here. It's been a fairly long one, but I hope this helps. And Cyber, welcome to the forum. I hope this has really helped you. And at least it forms something to discuss down the track anyway as well on the forum. So thanks very much, and have a great trading day. Bye.